Hi there, welcome once again to Dukascopy TV. I'm Ben Jones. UK inflation continues to drop and worries increase over whether the UK can avoid damage from the Eurozone slowdown. On the line to discuss this with me is Alasdair Cavalla from the Centre for Economics and Business Research. So, Alasdair, we've seen the inflation rate released today standing at 1.2%. A drop from last month's 1.5% was expected by most, but did you see the figure dropping this low, and what does it mean for the UK?
No, we didn't see it dropping this low. While the direction was expected, the magnitude of the drop was unexpected. It hasn't been at these levels since September 2009, which was in a very different economic context. So it is really quite low now, and the median forecasts for this month were to be about 1.4%. What it means for the UK is at the moment it's not too bad on its own for the economy. The most important effects are that the Bank of England can really hold off raising the interest rate. People were thinking of a rate rise maybe first or second quarter 2015, but now that's looking more likely that it would be maybe third or even fourth quarter. People are pushing back on the likely timing of that rise above 0.5% interest rates, and that removes a dilemma for the bank. And another useful effect is that wage growth, which has been so low in the UK's economic recovery, at least translates better into living standards, because high inflation would erode a lot of the gains that people were seeing, which, as I say, are small so far. However, if inflation keeps falling lower, which it is on a downward trajectory and has been for some time, it will be problematic, and that's why the Bank of England's target zone for inflation is 2% plus or minus a percentage point, where they're supposed to keep it from going too low as well as too high. Inflation of a moderate level does have a use in making debts more manageable for the economy, and in a situation with very high public and private debt, that's obviously important. It also tends to stimulate demand, because the reverse scenario of deflation means that falling prices encourage consumers to save money rather than to spend. And of course, in a situation where demand as well is a worry, then we would not want either to see too low inflation. So inflation is not yet worrying at 1.2%, but it may yet become so.
Now, unemployment figures are released tomorrow. Can we see a further drop from the 6.2% figure?
I think that's on the cards, yeah. I'd say our most likely central forecast would be that next month, which would be the August figures, I believe, would fall to 6.1%. So we are in a strange time of falling inflation and unemployment at the moment. But the monthly figures are volatile, and it may be this month it stays put. Overall, though, the trend is very much downwards for unemployment. This is shown in forward indicators, for instance, surveys of firms in which firms had very high positive hiring intentions until very recently. Now, their hiring intentions are still positive, but they have been dropping off in the past month or two. So we would expect that the rate of inflation, also because it's coming down towards normal levels, we would expect that the drop will level off. However, by the end of the year, we should see a level beyond 6%, below 6%. And what happens beyond that will really depend on the situation in the global economy, particularly the Eurozone.
And finally, to what extent are the troubles in the Eurozone affecting the UK? And can a worsening situation there create more problems for the Bank of England?
Definitely. So far, the UK has remained surprisingly detached in terms of growth rate and from the Eurozone, and it has powered ahead. growing at a healthy level of around 3%, while the Eurozone has been back around 1%. However, recently we're seeing forward indicators affected by the Eurozone situation, confidence dropping off among a lot of firms, and that's already started to hit manufacturing confidence quite hard, seeing as manufacturing is much more reliant on exports than the service sectors are. So services firms haven't quite seen that yet, but I would imagine will start to soon. And I mean, of course, if the Eurozone does re-enter recession, that would be very negative for the UK's growth prospects. But even if the Eurozone manages to avoid a recession, certainly the effects on our economy from Eurozone demand being so low and activity being so weak are really unhelpful at the moment.
Alasdair, thank you once again for joining me today. That's all we have time for now. Thanks for watching, and make sure you keep clicking back to Dukascopy TV. Bye for now.